Thank you for joining me today. You're speaking to Garth, and today we're going to be talking about the lesson of trading plan. So, today's lesson will be discussing the importance of having a trading plan. So, if we jump into it, what is a trading plan? A trading plan is something that will give you a structure in order for you to keep discipline, in order for you to not over trade, or for you to respect your rules. So a trading plan is just a we can call it a GPS, or we can just call it a way in order for you to know where you're going. So in the trading plan, the first thing we focus on when you have a trading plan, you have your account. So in your account, you have the balance. Your starting balance, let's say for example, you have 1,000 rand starting amount, and then you know that you have a balance of 1,000. This basically means that you already know the amount that you're going to be working on. And then a risk per trade. This is where you prepare yourself for anything that can happen the opposite direction. Besides you making money, the market can always go against you. So you need to know before you execute a trade, how much are you willing to risk. The lot size is the amount of lot size that you will be using when you execute. So you can't jump to lot size 0.05, lot size 0.10. You need to stick to one lot size that you know will be able to sustain your account. So from 1,000 rand account, you know that a lot size of lot size of 0.01 is actually enough to grow your account. So in the account and risk management section, you see that also we do have the number of trades per day. You need to know how much you're willing to risk per day. If you're not willing to risk, or if you're not willing to set a limit to your trades, you will overtrade and you will trade more times than you should. So if you put in at least two maximum trades per day, that would be enough on 1,000 rand account. So let's look at a daily profit. If you're looking to make profit daily, you need to know how much you want to make per day. So the daily profit there can be 400 rand, the daily profit there can be 500 rand. It all depends on how much daily profit are you targeting, and realistically so, knowing that your daily target cannot exceed your balance all the time. So you need to have to work with a percentage. So that's why I'm saying if your daily target is 400 rand, then you know per trade you need to make at least 200 rand because you executing two times. And then that's what I was saying the other time. I did mention here that risk the risk involved is 100 rand. So you're risking two trades uh, daily. So in two trades daily, you know that okay, I'm risking 200 rand per two trades, 100 rand per trade. So let's go to the strategy. The second point you need to have is the strategy. What strategy are you going to use for you to meet certain targets? For example, now you're looking at the market and you're focusing on a particular pair. Maybe you're focusing on GBP USD, maybe you're focusing on gold, maybe you're focusing on Euro USD. So in your trading strategy, you need to know which pairs are you looking at. You can't look at everything, because if you look at everything, you need to study the patterns of each and every behavior, and which can take a lot from you. So you need to look at certain pairs or certain shares, or even if you're trading commodities, if you're trading stocks, you know which ones to look at, but you can't look at everything. So another thing that we look at is the primary method. What are you looking at when you are entering your trades? Are you looking at supply zones and demand zones? So in my strategy, I look at supply and demand areas, and I identify strong supply resistance and demand support areas. So That's how I execute. I look for those areas. And then another point is that I look for breaking of ranges. It can be breaking of structure, breaking of supply, breaking of demand. So I focus on market consolidation and trade once per range is broken. So this is a strategy that I use as I'm going into my trading plan. So your trading plan, maybe you trade via moving average, or you are executing via Fibonacci. It all depends on what strategy are you using. So this is just an example of a trading plan. You can have your own trading plan. You can just use this in order for you to get direction on how to draft your own trading plan. So entry confirmation, in even there in the strategy section, you see that I do have entry confirmation. I look for candlesticks such as engulfing candles and all of that. This is my entry confirmation. So let's go to point 3. This is trading execution rules. So I need to apply my rules. I need to stick to my rules. My rules, point number 1, I identify supply and demand levels on high time frames. And I refine entries on lower time frames. This is what I do. I look at high time frames and I execute on a small time frame. And then I enter only when candlesticks confirmation allows. So I don't take any entries if I don't see any confirmation. This is what you can have in your trading plan. And then point number 4, risk is kept at 100 Rand per trade. You don't change this. You don't wake up. If you're saying to yourself that you're going to stick to your trading plan, risk 100 Rand per trade and don't change it. Unless you see that, okay, the market allows you to change it. Maybe you can put this to 150 Rands or 200 Rands, but it all depends on the structure, what you're looking at. But stick to one thing so that you are able to keep your discipline. So place stop loss beyond the zone or just outside the breakout. This is just where I would be looking to put a stop loss right above or below. So this is point number 4. This is what's important: trading psychology and discipline. Follow the 2 trade maximum rule. Don't change your rules. If you see that now you are excited or you have made enough money, don't change. Stick to your rule, and that rule is to trade 2 times per day. That's the maximum. Avoid chasing trades. So this is what I have in my trading plan. I avoid chasing the market after a loss. I stick to the plan regardless of emotions. So I did mention, even when we spoke about psychology or emotional trading, that your emotions can play a very big part in your losing streak in the market. So stay away from trading with emotions. Review trades daily. So if you know that you've traded today, check if you've made profit. What allowed you to make profit? How did you make profit? So review and growth plan. Keep to a growth plan. You can't always be risking 100 Rand for the rest of your life. Now that you've grown your account to 5,000 Rand, now that you know that you can look to increase lot size or your risk plan. So keeping a trading journal with screenshots, notes of each trade. So you need to have screenshots so that you can go back and check as to what happened during the week, what happened with that trade. So this will help you review the number of winning versus the number of losing trades. And then check if the rules were followed. So if you check the rules, sometimes you check, okay, this week I've been losing. But if you check closely, you will see that you are losing because you didn't follow all of your rules. So if you don't follow the rules, sometimes we lose very much. So adjust strategy only if consistent patterns emerge. So do not change your strategy only because you saw someone changing their strategy or using a different strategy. Stick to your strategy unless you see that you need to evolve your strategy. Maybe the breakouts are your strategy. You come in too early or you come in too late. So The conclusion is that this trading plan ensures controlled risk management while focusing on a high probability setup. So this trading plan will allow you to have high probability and then high probability trades using supply and demand zones, range and breakouts. So this is my trading plan. So if you want to execute or draft your own trading plan, do text me on the side and say, let's work on your trading plan, and I will make sure that we focus more on getting your trading plan and you being comfortable with how you trade. So the importance of a trading plan is to actually keep discipline, is for you to not blow your account too early, is for you to just be able to apply and keep to your trading rules. So until we meet on another lesson, thank you very much, guys.